guys, welcome back to the channel. My name is Stock Brock. Let's talk about some of the numbers that Robinhood dropped today. Revenues up 100% year over year. Net deposits up a record $20 billion. Robinhood Gold subscriptions reached over 3.9 million. Diluted EPS up 259% year over year. Robinhood is now up to 11 business lines, each growing 100 million or more in annualized revenues. Let's mention a couple more numbers. So net revenues up 100%, transaction-based revenues increase 129% year over year. Cryptocurrency revenue up over 300%, options revenue up 50%, and equities revenue up 132%. So this business is on a tear right now. Net interest revenues increased 66% year over year. Other revenues, primarily due to increased Robinhood Gold, up 100%. Net income increased 271%. Total operating expenses increase as expected for growing revenue, up 31% year over year. And funded customers increased 2.5 million. Total platform assets increased 119% year over year. And net deposits were 20.4 billion. An annualized growth rate of 29%. And last number, Robinhood Gold up 77% year over year. So all the numbers for the earnings look great. The stock is up 200% in 6 months and over 400% in a year. So if analysts expect $125 average price target, the stock is trading at 140 to 150 at the moment, then the upside appears to be limited based off of the analyst expectation for the stock. So I think the stock is down definitely because of the very high valuation, market cap of 130 billion and a PE elevated at 73x, implying the market is pricing in strong future growth from Robinhood. But any slip-ups could bring the stock down very much and raises the bar for what management must deliver on for future quarters. And they do seem a little spread out with a lot of different business lines, which I think is great. But I think sometimes when a business is really focused on certain things, they do them very well. So I'm not necessarily thinking that Robinhood is not going to do these different business lines well. They're obviously doing them well, but just a concern and a risk, especially being an investor. I personally do not own Robinhood, but the stock is already highly rated and has lofty expectations. The market may be looking for exceptional forward guidance or margin improvement. Margins do look great at the moment, but with increased operating expenses, that's the potential of shrinking those margins. And when you have contracting margins, it brings the stock down. The elevated valuation means any hint of risk, slowing growth, rising costs, as mentioned, weaker mix gets magnified. And some analysts' average price targets are below, of course, the current price, suggesting that the market may believe Robinhood is fairly valued or overvalued, which I currently believe based off the lofty valuation metrics. The combination of strong current numbers, cautious future commentary, high valuations equals a situation where a beat does not guarantee the stock to go up. What to watch for next? Look out for quarter four guidance and metrics, expense trends and margin, product mix, products in the mix risk, and any analyst updates from big banks. So in summary, Robinhood did have a very good quarter. Management sounded positive, but the valuation is very high. Analyst targets don't give much room for error for this stock, even though do your own research, do your own valuation models. That's why you're seeing the stock go down, even though the reporting was strong. If you're holding or thinking of holding, pay close attention to next quarter's guidance and the cost mix story. Thanks for watching. Stock Brock. Peace.